the data was probably a little bit more on the negative side than what some people had expected, albeit it continues to improve, which is great news, particularly on the industrial production side. Also, retail sales continued to recover. Some of this, of course, was driven by the acceleration in automobiles purchasing, which is a good sign for things like steel, as well as on the property side. Clearly, cement and other materials have had a pretty good run over the last month or so. So generally speaking, the data continues to improve. That should put a floor under a lot of these risk currencies, such as Aussie dollar and so on, going forward. Of course, the yen looks a very good hedge at this stage against any particular risk off with regard to COVID cases picking up.
Right. So what is your call on the Aussie dollar? Do you think there's more downside for the Aussie dollar, given how China investments in the region have dropped 60%, the highest in a decade that we've seen? There is risk about education exports revenues that is getting impacted. And then, of course, like you said, if this data looks mildly negative, all the three economic indicators put together, then wouldn't that be added pressure for the AUD?
Look, I think there's a couple of key reasons why the Aussie dollar has risen. Firstly, it's a general pickup in risk sentiment on a global basis. People tend to drift to the Aussie currency as a high beta to an improvement in industrial production and other manufacturing activity, etc. But not only that, but we also slightly upgraded our GDP forecast for Australia last week because the country is coming back to work more quickly than we expected. So consequently, we actually, while we still see downside, obviously, to GDP in the June quarter, we see the pickup in the second half as a little bit stronger than what we previously thought. So that, and in coupled with the fact that we're seeing rising cases of COVID-19 in Brazil, which is leading to some disruptions of production of iron ore in that country, that will only benefit the iron ore producers of Australia. Not only that, but energy prices, while they're coming off a little bit at this stage, we do expect them to recover over the next 12 months, particularly oil, to around the $45 a barrel. That will only help gas prices stabilise and start to move higher. That means the terms of trade for Australia is going to improve. That, coupled with interest rates in Australia trading at a premium again to interest rates in the United States, is a pretty supportive environment for the Aussie dollar more generally. So we pick it to move to around the 73, 74 as we get into the start of 2021.